In this podcast episode, Arthur Hayes discusses the significance of Bitcoin and cryptocurrency in the current economic landscape. He emphasizes that Bitcoin is a form of money that is globally owned by everyone, providing individuals with the opportunity to save in a currency that is not controlled or manipulated by governments or central banks. Hayes believes that we are at a pivotal moment in history where traditional financial systems are being challenged, and people are turning to cryptocurrency as a way to preserve their wealth and participate in a decentralized financial system. Hayes explains that Bitcoin serves as the reserve currency of the cryptocurrency market, focusing on security and immutability. He highlights that Bitcoin's community is dedicated to maintaining the integrity of the blockchain and ensuring that it remains the hardest form of money. As the cryptocurrency market grows, Bitcoin's volatility is expected to decrease, making it a more stable asset over time. Hayes delves into the evolution of crypto markets, noting that individuals often start with Bitcoin and then explore other cryptocurrencies with higher volatility. He suggests that Ethereum is a leading decentralized computer that powers decentralized finance, DeFi, applications. As individuals become more familiar with the crypto space, they may venture into other altcoins that offer different functionalities and risk profiles. Hayes views volatility as a natural aspect of markets and human behavior. He explains that individuals are constantly making decisions based on probabilities and uncertainties about the future, which inherently involves a level of risk-taking. While volatility can be advantageous for traders seeking quick gains, it is essential to approach leverage trading with caution and expertise. Hayes discusses the role of governments in manipulating currencies through Keynesian economics, particularly in times of economic crises. He acknowledges that government intervention can be beneficial when used to fund infrastructure projects with a high rate of return. However, he criticizes governments for excessive spending and debt accumulation, leading to inflation and wealth inequality. Hayes sees cryptocurrency as a potential solution to the flaws of traditional financial systems, where governments can manipulate currencies and socialize losses. He believes that the decentralized nature of cryptocurrency empowers individuals to save and transact without interference from central authorities. By investing in cryptocurrency, individuals can protect their wealth and participate in a more transparent and equitable financial system. Hayes acknowledges the growing wealth disparity and economic challenges faced by individuals, particularly in the middle class. He highlights the demoralization and frustration experienced by many who struggle to afford basic necessities and achieve financial stability. The migration to cryptocurrency represents a shift towards financial independence and empowerment for individuals seeking alternative avenues for wealth preservation. Hayes explains that excessive government debt leads to inflation and unsustainable economic activity. He mentions the example of Argentina, which has defaulted on its debts multiple times due to economic instability. He suggests that austerity measures or a debt jubilee may be necessary to address the debt crisis. However, he acknowledges that austerity can be painful, especially for those with significant assets. Hayes delves into the relationship between money printing, overproduction, and global conflict. He explains that when governments print money to stimulate economic activity, it leads to overproduction of goods that need to be sold in other markets. This competition for markets can escalate into conflicts between countries vying for economic dominance. He draws parallels to historical events like World War I and II, where economic factors played a significant role in triggering conflicts. Hayes discusses two possible approaches governments may take towards cryptocurrency. The first is to allow the creation of Bitcoin ETFs, which would provide a regulated way for people to invest in crypto assets. This approach would give the appearance of financial freedom while still keeping control within the traditional financial system. The second approach would be to ban cryptocurrency, which could backfire by creating more demand for crypto assets among the population. Hayes encourages individuals to take a proactive stance towards financial empowerment and advocacy for change. He criticizes a defeatist attitude that assumes governments will always act in their own interests and urges people to challenge the status quo. He believes that owning Bitcoin is a way to assert financial independence and resist centralized control over money. Drawing a parallel to the Second Amendment in the United States, Hayes likens owning Bitcoin to a form of financial self-defense against potential government overreach. He suggests that having the ability to control one's money is akin to having the right to protect oneself against tyranny. He acknowledges the risks and challenges of managing crypto assets, but emphasizes the importance of maintaining financial autonomy. Hayes explains that Bitcoin is not just a financial asset like gold, but also a monetary network. He highlights the importance of the Bitcoin network being active and used for transactions in order to give value to the cryptocurrency. He compares this to gold, which is a financial asset that can be stored without any activity. Bitcoin, on the other hand, must be actively used to maintain its value. Hayes discusses the differences between Bitcoin and Ethereum, noting that Ethereum is more focused on being a decentralized computer network, while Bitcoin is primarily a monetary system. He explains the events surrounding the 2016 DAO hack on Ethereum, which led to a hard fork in the network. This decision showcased Ethereum's focus on being a decentralized computer rather than a strict monetary asset like Bitcoin. Hayes praises Michael Saylor's strategy of borrowing money in a depreciating asset to invest in Bitcoin. Saylor's approach of shorting the dollar and going long on Bitcoin has proven to be a smart trade, especially with the rise of institutional interest in Bitcoin. Hayes explains how Saylor's corporate entity, MicroStrategy, has become a proxy for Bitcoin investment, attracting investors who want exposure to the cryptocurrency. Hayes emphasizes the power of narrative in the cryptocurrency market, particularly the current meme of never sell surrounding Bitcoin. He advises against going against the prevailing narrative, as it can lead to significant losses. He acknowledges the cyclical nature of markets and the potential for Bitcoin to experience significant price fluctuations in the future. Hayes discusses the potential for Ordinals and NFTs on the Bitcoin network to generate transaction fees and bring human culture to the cryptocurrency space. He highlights the demand for block space beyond traditional Bitcoin transactions and sees Ordinals as a way to create intrinsic value on the Bitcoin blockchain. He believes that exploring new ways to use the Bitcoin network will help incentivize miners and maintain the network's viability in the long term. In terms of investment strategy, Hayes recommends following market trends, especially in the volatile and meme-driven cryptocurrency market. He suggests that momentum trades can be profitable in such an environment, where the trend is your friend until it changes. He advocates for controlling spending, investing in index funds, and thinking like an owner when it comes to financial decisions. In the previous bull run in 2021, Hayes identified two key signs that indicated it was time to get off the train. First, he observed excessive euphoria and rapid adoption rates in the cryptocurrency market, particularly with companies like FTX making significant investments. Second, he monitored the momentum in the credit market, noting a surge in money printing that eventually led to a correction. Hayes predicts that the current cycle may see a credit event in the government bond markets. If the biggest buyers of bonds step back due to irresponsible fiscal policies, it could trigger a crisis. In response, the government may resort to printing more money to stabilize the market, leading to a surge in cryptocurrency investments. Hayes anticipates a shift in the narrative around institutional buying of Bitcoin, signaling a potential peak in the market. In the event of a bond market crisis and a subsequent cryptocurrency boom, Hayes plans to evaluate his investments strategically. He considers diversifying into real assets like energy-producing assets or major corporations at attractive prices relative to the inflated cryptocurrency market. While he intends to hold on to Bitcoin and Ethereum, he aims to capitalize on the high valuations to secure alternative investments. Hayes highlights the role of government officials like Janet Yellen in managing the bond market and ensuring funding for government initiatives. He notes that central banks may intervene to stabilize the market by printing more money, akin to the approach taken by the Bank of Japan. This intervention could lead to a surge in cryptocurrency investments and potentially drive Bitcoin prices to unprecedented levels. Hayes envisions a scenario where Bitcoin enters a phase of stability and becomes less volatile, leading to a period of sideways movement for the next 2 decades. He suggests that this phase of stability in Bitcoin could be an opportunity for investors to maximize the value of the cryptocurrency before a potential surge in price. Hayes discusses the role of ETFs in the cryptocurrency market and how they could impact the volatility of different cryptocurrencies. He believes that as ETFs become more prevalent, they could lead to increased capital inflows into the crypto market, driving up prices and creating opportunities for investors. He highlights the potential for ETFs to bring more institutional money into the market and increase trading volumes, leading to greater price appreciation across the crypto space. Hayes mentions the concept of dollarization, where countries use the US dollar for trade, and how it has been slowly declining over the years. He explains that countries may continue to use their own currencies for trade, settling the net balance in gold. This shift towards a multipolar currency system could impact the dominance of the US dollar as a reserve currency. Hayes discusses the possibility of governments revaluing gold on their balance sheets to strengthen their currencies. By increasing the value of gold, countries can make their currencies appear stronger, especially in times of economic crisis or high debt levels. This revaluation could have significant implications for the global financial system. Hayes suggests that removing programs like Social Security could be beneficial for the economy, but acknowledges the political challenges associated with such a move. He also highlights the need for healthcare reform to address the root causes of health issues, such as poor diet and overprescribed medications. Hayes predicts a significant increase in the value of Ethereum, possibly reaching $30,000 to $40,000. He attributes this growth to the intrinsic yield of ETH through staking and its role as the decentralized computer of the Internet. The potential approval of an Ethereum ETF could further drive up its value. Hayes explains his approach to trading cryptocurrencies based on cultural trends and narratives. He emphasizes the importance of understanding the fundamentals of the assets he trades and being able to differentiate between hype and reality. By reading the market signals and knowing when to enter or exit a trade, he maximizes his trading opportunities.